While everyone's watching prices crash, something unusual just happened with XRP. Institutional money moved in the opposite direction during the biggest market bloodbath we've seen in months. The derivatives numbers tell a story that contradicts everything you're seeing on the charts right now. What's happening behind the scenes reveals a pattern that most retail investors completely miss. We're watching two different markets emerge, one driven by panic and headlines, the other by infrastructure and strategic positioning. XRP sits right in the middle of this divergence, and the data from the last 48 hours shows exactly why institutions aren't following the crowd. This isn't about short-term price action. We're seeing the foundation of something much larger being built in real time, while everyone else is distracted by red candles. By the end of this video, you'll understand what smart money is positioning for and why the current market chaos might actually be accelerating the timeline instead of delaying it. The AI revolution is moving faster than regulations can keep up with. We're now at the point where AI agents are entering the cryptocurrency space, and they're not just observing markets anymore. They're actively participating. These aren't your basic trading bots either. We're talking about sophisticated autonomous systems that can execute complex financial strategies across multiple platforms simultaneously. Here's where XRP enters this equation. AI agents need infrastructure that can handle high-speed transactions with minimal costs and maximum reliability. Traditional payment rails can't support what these systems require. Doppler Finance just crossed a major milestone with over 50 million XRP locked in their vault protocol. That's not random retail investors playing around with small amounts. This represents serious capital flowing into XRP native yield infrastructure. The demand for this type of platform is accelerating, not slowing down. Think about what this means. Institutional players and sophisticated AI systems are choosing XRP's ledger specifically because of its technical capabilities. And if you appreciate learning about these developments before they hit mainstream headlines, showing your support helps us continue delivering this analysis daily. But the timing of what we're seeing raises interesting questions. Ripple just moved 534 million XRP, and immediately everyone assumes the same old narrative. Dumping on the community, suppressing price, all the usual speculation, except the timing doesn't match that story at all. Next week marks XRP Community Day. Major industry events like this don't happen in isolation. They're typically accompanied by significant announcements or strategic moves. What if this XRP movement isn't about selling into markets? What if Ripple is positioning for an acquisition or funding a partnership that brings immediate utility? Large capital movements like this often precede major business developments, not market dumps. We've seen this pattern before where Ripple makes strategic transfers right before announcing new corridors or enterprise partnerships. The market always jumps to the worst conclusion first, then gets surprised when the real purpose gets revealed. Something significant is likely happening next week, and this transfer might be directly connected to whatever gets announced at Community Day. Here's where things get really interesting, though. While markets were bleeding and XRP's price dropped, derivatives activity exploded in the complete opposite direction. XRP futures volume surged by 5,674% in just 24 hours, reaching nearly $215 million. That's not a typo. Almost 6,000% increase during a market crash. This is the institutional demand signal that matters more than spot price action. When futures volume spikes like this during a downturn, it reveals that sophisticated traders are positioning for what comes next, not reacting to what's happening now. These aren't retail panic buyers. These are calculated positions being opened by players with deep pockets and longer time horizons. The same pattern showed up with XRP ETF flows, price dumps. Yet we see surges in institutional inflows through regulated products. This tells you everything about where the smart money is looking. While retail investors are watching red candles and panicking, the divergence between price action and institutional positioning has never been more obvious, and it's signaling something important about where XRP is headed in the coming months. Now, let's talk about infrastructure expansion. BitSo, one of Latin America's largest exchanges and a day RLUSD partner, just accelerated their cross-border payment operations using both Ripple payments and RLUSD. They're publicly stating they want to become the primary rail and payout partner for the entire Latin American region. This matters because RLUSD opens doors that lead directly back to XRP. Think of stablecoins as the gateway drug for traditional finance entering crypto rails. Institutions start with familiar dollar-denominated assets, then discover that XRP moves value even faster and cheaper than stablecoins. Every RLUSD corridor that gets built simultaneously validates XRP's utility for the same use case. Bitso specifically mentioned growing US demand and their readiness to serve it through these new rails. We're watching real-world payment infrastructure being constructed block by, and XRP sits at the center of this expansion. As RLUSD adoption grows, XRP adoption follows. The two work together, not in competition. What do you think happens when businesses realize they can move money internationally in 3 seconds for fractions of a penny? Drop your thoughts below, because this shift is happening faster than most people realize. Meanwhile, something fascinating is happening with Bitcoin's story. The narrative that drove Bitcoin to its peak is falling apart in real time. A recent financial analysis highlighted how gold has been outperforming Bitcoin and acting more as a hedge against global instability. That's supposed to be Bitcoin's entire value proposition. Digital gold, store of value, hedge against chaos. But gold is doing that job better than Bitcoin right now, which raises uncomfortable questions for Bitcoin maximalists. The scarcity argument alone isn't enough. 21 million supply cap doesn't create utility by itself. The Bitcoin narrative was built on belief, and belief systems are fragile when they're not backed by actual use cases. Then the Epstein files dropped, and things got even more complicated for Bitcoin. One analysis pointed out something damning. I've spoken to some of the founders of Bitcoin. Wait, founders plural. Bitcoin was supposed to be created by one anonymous person that nobody knows. Now we're learning there were actually multiple founders. This contradicts everything the Bitcoin community has claimed for over a decade. The foundation of Bitcoin's origin story is cracking. And when origin stories fall apart, belief systems collapse with them. XRP doesn't have this problem. We know exactly who built it, why it was built, and what problem it solves. There's no mystery that can suddenly get exposed and undermine the entire project. Transparency matters, especially when institutional money needs to justify large-scale investments. But there's another elephant in the room that Bitcoin investors should be watching closely. Tether minted another billion USDT today. They keep doing this over and over. Every time Bitcoin price drops, more USDT gets minted, and Bitcoin's price stabilizes or bounces. This pattern has been happening for years, and it's propping up the entire Bitcoin market structure. Here's the problem. Tether operates in a regulatory gray zone with questionable reserves and minimal transparency. Multiple investigations have questioned whether Tether actually holds the dollars they claim to have backing their stablecoin. If Tether ever loses its peg or faces serious regulatory action, Bitcoin crashes with it. The two are deeply interconnected. Now XRP's infrastructure doesn't depend on Tether. It doesn't need constant stablecoin printing to maintain market positioning. The utility is built into the ledger itself. Real payments, real settlements, real institutional adoption, not artificial demand created by questionable stablecoin issuance. This fundamental difference becomes more important as regulatory scrutiny intensifies across the crypto industry. Now, here's the part that blows my mind. XRP's price dropped significantly during this market crash, right? Panic everywhere. Red across the board. Except the XRP ledger just processed 1.88 million payments during this exact same period. Payment volume surged while price dropped. Let that sink in for a moment. Nothing changed about XRP's actual utility or adoption. The infrastructure kept growing. The partnerships kept expanding. The technology kept processing transactions faster and cheaper than almost any other blockchain. Price action and actual usage are two completely different things, and they're starting to decouple more clearly than ever before. This is what I mean when I say XRP still follows Bitcoin's price movements, but is gradually decoupling. Every time Bitcoin falls, XRP falls. Every time Bitcoin rises, XRP rises. But the magnitude of those movements is changing. And more importantly, XRP's on-chain activity is moving independently of price. Eventually, the market will recognize this divergence and price XRP based on utility rather than Bitcoin correlation. The real adoption is happening at the merchant and consumer level in ways that most people aren't paying attention to yet. New data shows that younger generations are leading the charge in cryptocurrency payments. Gen Z comes in at 77% interest, millennials at 73%. Compare that to only 4% for baby boomers. This represents a massive generational wealth transfer that's happening right now. For small businesses specifically, Gen Z interest hits 82%. If you're a business owner trying to capture the next generation's spending power, accepting crypto isn't optional anymore. It's becoming a competitive necessity. And here's the key insight. Businesses that integrate crypto payments early are going to double their customer base in a very short time frame. But this isn't about accepting crypto just to convert it immediately to dollars. That defeats the entire purpose. The future is crypto-to-crypto transactions where merchants hold digital assets directly. XRP is perfectly positioned for this transition because of its speed, cost efficiency, and growing regulatory clarity. As this generational shift accelerates, XRP adoption accelerates with it. And if you're finding value in this analysis and want to see more content like this breaking down what's really happening behind the headlines, subscribing to the channel ensures you don't miss these insights as they develop. Now let's zoom out and look at the bigger economic picture because it connects directly to why XRP matters more than most people realize. The US Treasury just bought back $2 billion of their own debt. That makes $6 billion this week alone. This is a massive signal that the US dollar is losing momentum globally. Countries around the world are moving away from US debt. They don't want to hold it anymore. This forces the Treasury to buy back their own bonds, which is essentially printing money to cover previous money printing. Every cycle of this process dilutes the dollar's value further. This is why the US wants to tokenize debt. They're trying to reach new markets that traditional financial systems haven't penetrated yet. The unbanked population globally represents a massive untapped market for US debt instruments. By tokenizing debt, they can sell it to populations that were previously unreachable through traditional banking infrastructure. But here's where it gets interesting. From a cryptocurrency perspective, tokenization requires blockchain infrastructure, and that infrastructure needs to be fast, scalable, and regulatory compliant. We might be headed toward a new financial system entirely. Some analysts believe we're moving toward a gold-backed system. Others think the debt gets wiped out through some form of reset. And there's a scenario where XRP plays a central role in settling international debts because of its bridge currency capabilities. That's speculation, but it's based on real technical capabilities and existing partnerships. This is exactly why selling XRP for dollars right now seems counterintuitive to me. The dollar is losing buying power consistently. XRP has the potential to gain buying power as adoption increases. In the future, assets might be priced directly in cryptocurrency rather than converted back to depreciating fiat currency. If that happens, holding XRP through volatility becomes the obvious strategic choice rather than trading it for short-term dollar gains. Before we wrap up, I want to make sure you're part of the conversation as these developments continue unfolding. What's your take on the institutional positioning we're seeing versus the price action? Are you holding through this volatility or taking profits? The discussion in the comments often reveals perspectives I haven't considered, so I read through every response. Here's what all of this information points toward when you connect the dots. We're watching multiple systems break down simultaneously. Bitcoin's narrative is cracking. Tether's sustainability is questionable. The dollar is losing global dominance. Traditional payment infrastructure can't handle what's coming next with AI agents and instant global settlements. XRP isn't just surviving this chaos. It's building the infrastructure that replaces what's breaking down. The derivatives surge during a crash, the payment volume increasing while price drops, the institutional products seeing inflows while retail panics. These aren't contradictions. They're signals that smart money is positioning for what comes after this transition period ends. The tokenization wave isn't coming someday. It's already here. Debt, assets, payments, settlements, all moving onto blockchain infrastructure. XRP was purpose-built for exactly this moment. Not as speculation, but as utility. Not as digital gold, but as a bridge between systems. Not as a belief system, but as actual technology solving real problems. This is why patience matters more than panic. Right now, the foundation being built during these volatile periods determines who's positioned correctly when clarity finally arrives. XRP holders who understand the infrastructure story aren't worried about short-term price action because they're watching something much bigger take shape. Next week's Community Day might provide more pieces of this puzzle. The Ripple transfer, the institutional positioning, the infrastructure expansion, it all seems to be converging towards something significant. And if you want to stay ahead of these developments as they unfold, subscribing ensures you're part of the conversation from the beginning, rather than reacting after everyone else already knows. The markets are chaotic right now. Bitcoin's story is unraveling. Dollar dominance is fading. But through all of that noise, XRP's infrastructure keeps growing. The payments keep processing. The partnerships keep expanding. The regulatory clarity keeps improving. That's not luck. That's strategy meeting opportunity at exactly the right moment in financial history. Stay patient, stay informed, and let's watch this transition play out.